So, welcome to today's video on levy. Under GST, so very important area is levy on supply of goods or supply of services or both goods and services. So, section 9 is the charging section under CGST Act and section 5 is the charging section under IGST Act. What about the states? States more or less follow the same way as CGST, because we do not have to study anything about SGST, because SGST is a replica of CGST. Wherever CGST is written, it would be replaced by SGST, because there is a uniform tax law all over India, even including the state of Jammu and Kashmir. Now the GST, entire GST is applicable all over the country, including the state of Jammu and Kashmir. That is a good part of this. And now we know GST is mainly in two parts. We have dual GST scheme under Indian law. Say when there is a taxable event of supply, if it is local, that is intrastate, CGST and SGST will be levied simultaneously at a time, whereas if it is an interstate supply, only one tax is imposed, that is IGST. Of course, that will be shared between center and state finally, if it remains. So, under section 9 and read with section 5, we are going to examine levy. And in this, let me tell you, so I would like to give you a simplified version of section 9 and read with section 5 of IGST. So, section 9 is about CGST Act, section 5 is about IGST Act, both are talking about the same thing with slight modifications. So, I would like to put it in a simplified way for your understanding, though it looks lengthy, but it is not lengthy, very easy to understand. How? You see, I am talking about section 9 right now. Section 9 is about CGST Act. Okay? Section 9 is about CGST Act. Levy means charge of tax. Tax is charged on interstate supply. See, it is on interstate supply, right? Number 1. And number 2, and intrastate supply. There are two kinds of supplies, interstate supply and intrastate supply. So, what is intrastate supply? Intrastate means within the state, you can say. So, when the supplier and the place of supply are in one and the same state. For example, the supplier is located in Delhi and the supply took place in Delhi. Supply was made in Delhi. Time of supply and place of supply are very important things, they have been given, and you have to read those provisions to understand it fully. So, right now it would be sufficient to understand that when there is a supply within the state, that is intrastate, central government will impose CGST and state governments will impose SGST. If it happens to be in union territory, it is UTGST in the place of SGST. So, intrastate supply means CGST central part plus SGST state part or UTGST. Both the taxes will be imposed, and CGST as per section 9, it is maximum 20%. So, obviously, state portion will also be maximum 20%, 20 plus 20, 40, that way. When you read from CGST Act, only 20% you see, but if you add up the portion of SGST or UTGST, 20 plus 20, it is 40. Okay. So, what about interstate supply? When the supplier in one state and the place of supply is another state. Supplier and place of supply are in two different states. So, in such a case, what happens? So, IGST is payable. So, IGST is a central law again, and it is payable to the central government. IGST you are paying, the maximum is 40%. Because CGST plus IGST put together 20 plus 20, here equation is clear, 40, right. So, but there are exceptions. If you look at in subsection 1 itself, the exception being alcohol for human consumption. This is potable liquor, you can say. If it is a case of alcohol for human consumption, in this case, sorry, GST cannot be imposed, because alcohol for human consumption is out of GST. It is in two stages. See, manufacture level, preparation and manufacture level, that is state excise collected, levied and collected by state governments. They are still collecting. Earlier also they were collecting, and today also they are collecting, and GST is not applicable to them. That is there. And what about the sale? Earlier, when there was a sale, VAT was being collected, VAT or CST was being collected by the respective state governments. Now, they will collect on sale, they will collect what you can say GST. Sale is a supply now. Okay? Sale is a supply now. So, alcohol for human consumption is kept outside because it is falling under state excise. And the second one is alcohol for human consumption is out of GST. And second one is petroleum products. These petroleum products, they have been specified. These petroleum products have been specified under what we can say subsection 2, 9(2) or 5(2). Under IGST Act, it is section 5 subsection 2. Under CGST Act, it is section 9 subsection 2. So, petroleum products to be at a later date. It is there, but they are to be brought under the purview of GST at a later date, to be specified by, recommended by GST Council. Right now, it is not there. So, right now on petroleum products, excise, customs duties, and of course, sales tax, they are being imposed as usual, and GST is not imposed. GST is not being there. Local sales tax law, CST, VAT are there, and excise is also there. Petroleum products. What are the petroleum products? There are 5 products: petrol, diesel, aviation turbine fuel, and crude petrol, and natural gas, one, two, three, four, 5. These are the products for which GST Act is not applicable. So, these are the 2 exceptions. Except these things, GST is levied on all other products supplied, or all other, any other services supplied, goods or services supplied. If the supply happens to be intrastate, this is the case. If the supply happens to be interstate, this is the case. And another point is, it is a percentage. Because it is a percentage, it is ad valorem method. Ad valorem means the tax is levied as a percentage on the value of the goods or services supplied. So, value means ad valorem method. Ad valorem method means valuation is necessary, whether it is goods or services. So, for value, section 15 is the valuation section, both for local and interstate. If you look at section 15, it will give you the details of valuation, how to value the goods or services. And then one more point is collection. Who is liable to pay? Another point is who is liable to pay. So, who is liable to pay? Taxable person is liable to pay. Every taxable person is liable to pay on the supplies. So, who is the taxable person? Again, taxable person is one who requires registration, who is registered or who is required to register himself under GST laws. Say for example, For registration, mainly who requires the registration, you have to find section 22 of CGST Act. And pay, suppliers whose turnover crosses 20 lakhs. Suppose in the previous financial year, all India basis, if your turnover happens to be about 20 lakhs, already crossed 20 lakhs, you are liable to get registered. Similarly, section 24 compulsory registration. There are 12 categories of people given under section 24, suppliers making interstate supply of goods or services. Like that, there is a list. 12 categories are there. For all these 12 categories of suppliers, registration is compulsory under section 24. So, unless somebody falls under section 23 as exemption, agriculturists are exempted anyway. Nil rated and fully exempted supplies, they are exempt. So, here levy, who is liable to pay GST, and taxable person, but there are special cases, or you can say exceptions. See, there are certain cases in which a person other than the supplier, here taxable person means supplier. In some cases, a person other than the supplier is liable to pay GST, that is also called reverse charge mechanism, RCM, reverse charge mechanism. There are 3 categories of people who require to pay GST under reverse charge mechanism, even though they are not supplying, even though they are receiving, they are recipients, still they are liable to pay GST. That we will look into. So, right now this is the information. And what about collection? Liability is okay. So, collection, I write here, liability is supplier, but legal language is taxable person. Taxable person is liable, and there are cases of reverse charge mechanism, exceptional cases, special cases. So, under reverse charge mechanism, recipients are liable to pay GST. And collection, payment. So, how the tax is collected? In the manner prescribed, as prescribed. What I mean by prescribed, you know, in tax laws particularly, if you look at GST law, section 2, clause 87. So, in clause 87, prescribed means prescribed by rules made under this act on the recommendation of the council. Normally prescribed and prescribed by rules. So, central government has made rules on the basis of the recommendation made by GST council. In the rules they have specified. So, in what manner you have to pay, what is the periodicity, how frequently you should pay, if you do not pay, what is the penalty, what is the interest payable, everything is there given under the rules. So, here taxable person is liable to pay, and special cases reverse charge mechanism, recipients or other persons are liable to pay, and manner of payment, collection is as prescribed. Okay. So, this is the information briefly about levy under section 9 of the CGST Act. And if you look at section 5 of the IGST Act, that is also talking about the levy, but it is also talking about the same thing, except that only single tax. So, it is maximum 40%, number 1. Number 2, in the case of, there is a proviso under section 5, in the case of imported goods, I am not talking about services. Of course, imported services are also covered under IGST Act, but particularly imported goods. In the case of imported goods, it has been clearly mentioned that IGST is payable in the place of CVD and special CVD. Earlier, under section 3.1 and 3.5 of Customs Tariff Act 1975, it was CVD and special CVD were payable, respectively were payable under Customs Tariff Act. Now, for most of the products GST is applicable. So, in such a case, now IGST is payable on imported goods at a time, levy is at a time when import duties are levied under section 12 of the Customs Act. Means when the import takes place, when the taxable event of import takes place, under section 12 import duty is imposed, right? When import duty is imposed, so what happens when import duty is imposed? Obviously, under section 12 BCD is imposed, basic custom duty. Under Customs Tariff Act, CVD and special CVD are imposed normally for goods not falling under GST, say petroleum products. So, for petroleum products, or you can say tobacco products, CVD and special CVD are still leviable. What about all other products imported? Now IGST is payable. That is what section 5, proviso to section 5 of IGST is talking about. So, when the goods are imported, goods which are liable under GST laws, when they are imported, IGST is payable on them. That is what it has been specified, which has been specified. So, that is extra. And what about reverse charge mechanism? It's a very important thing. So, I would like to discuss that also before I close. Reverse charge mechanism. So, very important. Reverse charge mechanism means, number one, you are a non-taxable person. You are a non-taxable person. Means non-taxable person means non-registered. You are not required to get yourself registered. Maybe you are exempt. An agriculturist, you are exempt. A person supplying exempted goods or exempted services, he is not required. And persons otherwise whose turnover is below 20 lakhs, not required. Persons not required under section 24. Like that, non-taxable persons. A non-taxable person providing services, supply of goods or services to taxable person. So, non-taxable person to taxable person. Here, this taxable person has to pay under reverse charge mechanism. This is very harsh, and I have uploaded some videos also. Like me, some other specialists also uploaded their videos, and there was a lot of hue and cry. Now you know there is a limit. That limit is up to 5,000 rupees per day. If a taxable person receives supplies from non-taxable persons up to 5,000 rupees, there is a chute, there is a limit exemption. No tax is payable under reverse charge. So, it is like exemption, because so many people raised the objection. Obviously, government understood, realized. So, up to 5,000 rupees per day. Beyond 5,000 means, sorry, the taxable person has to assess and pay GST under reverse charge mechanism. And second case is specified categories. Specified categories, section 9.3. This is 9.4 and this is 9.3. Specified categories, very, very important, please. These specified categories, government specifies categories of goods and services, not persons. The government specifies, notifies from time to time, these are the category of services for which reverse charge is applicable. Earlier also under service tax, they were there, repeated with small modifications, and the list is, it's an ongoing process. It will be changing from time to time. For example, you are receiving services from a goods transport agency, you are to pay. Suppose you are receiving services, you are a business entity receiving services from an advocate, lawyer, you have to pay under reverse charge, like that. So, specified categories of goods and services. For services already there, goods are also there, it is a continuous process. And third category, e-commerce operators. E-commerce operators for supply of services, that too specified services. If the e-commerce operators provide services through their websites, services, my services, it is like aggregator's job. My services, suppose I have video lectures, I have given them to say CA Cart, or you can say I have given them to CA Club of India. So, that CA Club of India is like an e-commerce operator, and through CA Club of India I am providing services. So, this CA Club of India, e-com operators have to get themselves not only registered, they have to pay under reverse charge mechanism. If they don't have any presence in India, somebody representing them in India has to fulfill all the obligations by getting registered, etc., etc. If they don't have any person representing them, if they don't have any presence, and if they don't have any person representing them, then they have to appoint necessarily somebody, and through them they have to pay GST under reverse charge mechanism. See, in a nutshell, everything is clear. So, entire levy portion of section 9 is here. See how simple it is. Let me put it in a nutshell. Whatever I have discussed, I want to put it in a nutshell. See, whether it is section 9 or section 5 of IGST Act, concept is same. Say section 9(1) is talking about levy. In this, it is talking about maximum 20% CGST. So, exception, it is giving an exception, alcohol for human consumption and value as per section 15, and collection in the manner specified under the rules. And 9(2) is specifically talking about petroleum products. Petroleum products to be announced at a later date, to be brought under GST network, GST law at a later date, to be recommended by GST Council. And 9(3) is talking about specified categories. Specified categories, all 9(3), 9(4), of course 9(5) is also there. 9(3), 9(4) in particular, e-commerce operator and provisos are also there. E-commerce operator, unregistered dealers, 9(3), 9(4), non-taxable persons. So, 2 taxable persons. Of course, 5,000 limit is there. 5,000 limit is very small. I think it should be increased to 10,000. If over a period of time they will do. Otherwise, it will be very inconvenient. So, 9(5) is about e-commerce operator. If the services, this is only for services, specified services, not goods. That is it, over. But if you look at section 5 proviso to IGST Act, it is extra talking about imported goods. On imported goods, IGST is leviable, along with BCD under section 12 of the Customs Act 1962. So, entire this thing, entire section in a nutshell is this way. I hope you understand it. You got it? Do you admit? Do you agree that this is simple as that? Nothing to worry about it. Haven't we made it simple? Okay? So, thank you very much.